Global developments matter a lot for economic developments in Australia, but they especially matter for financial market pricing. The exchange rate's a good example of that. The Australian dollar has depreciated quite a bit against the US dollar in recent months. Now, sometimes people think of that as a bit of a judgment against the currency and the country that's falling. But that's not always how it is. Because remember, an exchange rate is a relative price of two currencies. Most of the recent moves in exchange rates have been in response to things happening in the United States. That includes the appreciation that happened before and after the US election, as well as the slight reversal that has happened in the last few days. When thinking about exchange rates, here are three important things to remember. First, financial market participants are forward-looking. So they move prices in line with what they think is going to happen. And then when an event does happen, prices move for the surprise factor, not because that's what was expected. If something was expected, it's already in the price. So for example, most market participants expected that the Trump administration would be more fiscally expansionary and more inflationary than a Harris administration would have been. So as Trump went ahead in the polls, you already saw equity markets rise, bond yields rise, and the US dollar appreciate. We saw a little bit of that movement after the election result was confirmed, but most of it was already in the price ahead of the election. Secondly, a move in the exchange rate has to be sustained for a while before it has a material effect on the economy. While a short-term move might be awkward for somebody's holiday, the reality is that most firms engaged in trade or investing in markets will hedge a lot of their foreign exchange exposure through various kinds of contract. And so it's only after the exchange rate has moved and stayed there for a while that you actually see that really impact the experience of firms and importers and investors, and therefore the economy. Third, a broader view of exchange rates is a better guide to what it means for the domestic economy than just looking at the exchange rate of the US dollar alone. That's why the Reserve Bank of Australia publishes a trade-weighted index of all the exchange rates that the Australian dollar has with its main trading partners. The US dollar is the second most important currency in that index. The US is the second biggest trading partner for Australia at the moment, having recently leapfrogged over Japan and the euro area. But the US dollar is still only 11% of the index. China is Australia's biggest trading partner, and its weight in the trade-weighted index is nearly 30%. So while since late September, the Australian dollar has depreciated around 9% against the US dollar, it's depreciated by much less against the Chinese yuan and other currencies. And so against the trade-weighted index, it's only fallen about 4%. A lower Aussie dollar certainly does make an overseas holiday more expensive, and it can raise the price of imported goods over time. But the effect matters a lot more if it's broader than against just one currency. So the depreciation we've seen hasn't been enough to materially shift the dial in how we think about the impact on the Australian economy, at least not yet, and it certainly won't be a major consideration for the Reserve Bank when it meets in February.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.